Okay, so good morning, everybody. Thank you for attending the webinar this morning. We're talking through the government initiatives and how to access them. My name is Rich Olson. My colleague's name is Kate Goodman, and we're part of the team who are delivering the advisory service into the combined authority area. So if I just talk quickly through who we are and what we're doing. So we're providing the advisory service, providing real support to businesses on the government and other support initiatives available as a result of COVID-19. This is a fully funded service by the Cambridge and Peterborough Combined Authority and the Business Board. We have local partnerships like the Cambridge Chambers of Commerce, the Federation of Small Businesses, Institute Directors, and Make UK, plus all local councils, business networks, and other organisations. So it is quite a far-reaching organisation we're talking about. The team is a team of business advisors with knowledge spanning a wide range of industries and a variety of skills such as HR, finance, marketing, etc. And we are going to be covering in the course of a series of webinars topics around human resources, layoff versus furlough, and how can it be backdated and how does it work? Accessing finance, so this is primarily around the CBILS scheme. So we're talking through cash flow, funding options, the loan scheme, as I mentioned, grants available, etc. We'll be also going into marketing and crisis communications, importing and exporting, and the foreign exchange implications, working from home, employee well-being and mental health, and diversification online sales, plus business planning for when we come out the other side of this. So this morning, we're just going to talk through the business rates that are available, the holidays and grants, the loan scheme that I've briefly mentioned, VAT and time to pay, and business insurance. So I'm going to cover those 4 topics, and then Kate will take over and she's going to walk us through the self-employed income support scheme, the job retention scheme, and SSP and SSP relief. So if I just walk you through what's happened so far. So in terms of retail, hospitality and leisure businesses, as hopefully anybody who's in those sectors will have realised, for the 12 months starting from April 2020, there is a holiday in terms of payments. So in essence, your bill, which may have already been sent to you, will be reissued by the local authority. There's no action on you to do anything. But if you're involved in shops, restaurants, cafes, drinking establishments, cinemas, music venues, leisure, hotels, guest and boarding premises, self-catering accommodation, you should find that any council tax that you would have received will be rebated to you, or not, sorry, rebated, the bill will be reissued. There is also a retail and hospitality scheme. This is a cash grant of £10,000 for all rateable properties up to a value of £15,000 and £25,000 for rateable properties from £15,001 to £50,999, again for the same properties that I just mentioned. You need to check your local authority website. The initial advice was just to wait and hear what was happening, but actually the advice is to go and check the local authority website. Well, most of the time they are actually providing everything you need to access the scheme on their websites themselves. There were some interesting stats actually published yesterday, I think by the Chamber of Commerce, saying that over 50% of the money that's available for these various grant schemes has actually not been claimed as of yet. So there is a lot of money sitting out there that is available for businesses to claim. The next one is for businesses who are involved in nurseries. If you have nursery businesses on the Ofsted Early Years Register who wholly or mainly use it for the provision of early years foundation stage, then they are entitled also to a business rates holiday for the tax year starting April 20th. Again, there is no action required by the business owner and they should be having a bill reissued. In addition, for all small businesses, other than obviously the leisure sector, there is a cash grant of £10,000 available. This is based on the business concerned already receiving small business rate relief or rural rate relief. If they are in receipt of either of those 2 relief schemes, and then they are entitled to £10,000, again, they need to go to a local authority website, click on the website, fill in the information that's required of you. It will cover information such as your council reference. You may need your company number, your VAT number, and they will probably need to see a copy of your bank statement as well to prove your bank account details. So this will enable them to pay you quickly. And typically these applications are being paid in 2 or 3 days, so they're quite quick in that regard. The Coronavirus Business Interruption Scheme. So guidance was issued or published on the 20th of March. It's been updated a number of times since then. All businesses must be UK based with a turnover no more than £45 million. I'll talk about the other schemes available briefly. The headlines are that they will offer facilities from £25,000 to £5 million. However, we're actually seeing lenders going below this 25,000 into 10,000 and even below. It's backed by an 80% government guarantee to the lenders. However, this doesn't mean that the lenders are going to treat the credit underwriting of the business any differently to they would normally. The reason being is in the event of default, they are responsible to go and try and reclaim the money from the business because the business is 100% liable for the debt. And if they're unable to reclaim the money from the business, anything that they are short of in terms of the amount that was lent and is outstanding versus what they were able to recover, they will then receive 80% from the government guarantee. There are no arrangement or guarantee fees available for smaller businesses. There's 12 months interest-free payments. You have terms up to 6 years. However, for overdraft invoice facilities, invoice discounting facilities, that is only up to 3 years. As we know, the £250,000 is the magic number as regards no personal guarantees, although some of the high street banks are not requiring personal guarantees on any of the loans, full stop. And as I said, the borrower remains 100% liable for the debt. In terms of other points to consider, the first and probably the most important one is you must have a borrowing proposal which would have been viable for a lender prior to COVID-19. So basically, that's saying your business was a viable business as far as the lender was concerned prior to COVID-19. And the lender believes the provision of finance will enable you to trade out of any short or medium-term difficulty. So those are the prerequisites for getting a loan from any lender. Information you need to supply, you need to supply 12 months cash flow projections. This should be taken into account of any government initiatives, such as the ones I've just discussed, and some of the ones that Kate's going to talk about. So if you're due to receive a grant, they'll expect to see that in your cash flow. If you're due to take advantage of furloughing under the job retention scheme, that should be accounted for in your cash flows. You need to provide a copy of your last filed accounts. People also want to see your management accounts since you last filed your accounts. They will want to see your aged debtors and creditors, details of any other lending arrangements, and this will come back to fundamentally about affordability and whether you can afford the loans once the 12 months interest-free period is over. Details of how your business has been impacted by COVID-19 is also extremely important. I can supply you with a full list. I'm quite happy to do that afterwards. If you put your names and details in the chat pane, then we'll take details of that and we will send that out afterwards. The other thing you need to also consider is if you are approaching a new lender, then you have to go through the anti-money laundering process that each lender has, and therefore passports, proof of home address, etc., will be required for each and every director, stroke owner of the business. Another point is that you need to identify all expected costs, including your personal expenditure, which may be taken into account. I've seen circumstances where they are looking at how much you're drawing from businesses and they're saying, well, we know that you may have taken advantage of a mortgage holiday, therefore we would expect your drawings to be less during that period of time. So that's an opportunity for everybody to look at those numbers very closely. Lenders are prioritizing their existing customers over new customers, and that means they are not, some of them are not taking on any new customers at all. There are periods of capital-free repayments that are on offer. You have to ask for it. Some are offering it straight away, but the 4 main high street banks are generally offering 12 months of no capital payments at all. So effectively, you've got 12 months of paying nothing on your loan. Others are only offering 6 months capital payment holidays, some none. So you need to ask the lender before you go too far down this path, so you understand fully the implications for your business. You also need to keep a careful eye on what interest rates are being quoted. I mean, interest rates are varying dramatically, as you've heard probably in the press, from anything from about 3% up to about 18, 19%. So those are fairly significant in their own right. When this scheme was originally announced, there were 40 accredited lenders on the scheme. As of yesterday, there were 48 accredited lenders on the scheme, including obviously all the major banks. Some of these lenders are regional lenders. That means they only offer funding, for example, in the West Midlands, Coventry, Northwest. Others are specialists. There is actually a specialist lender who only offers lending to the print industry. There are lenders on there who only do asset finance. Asset finance is quite an interesting option for people, especially in the manufacturing environment, who may have plant and machinery where they can sell the equipment to the financer and lease it back to increase the amount of capital in their business. There are invoice discounting lenders, and both the asset finance and invoice discounting lenders will offer a term loan in addition to their main product, but they won't offer what we call a term loan, i.e. a commercial loan by itself. We have some of the lenders who aren't lending. So 3 out of the 48 accredited lenders actually are not offering any funding at all for one reason or another. There are further 10 or so who are not taking on any new customers, as I mentioned. So depending on where you are in the country, and bear in mind this is primarily aimed at businesses in Cambridgeshire and slightly the surrounding area, there's probably only a pool of 14 lenders or so who are available for you if you are looking at a funder outside of your main existing funder. The advice is to approach your existing bank/stroke lender first. Now, you may need assistance in that process and maybe help with putting together a lot of these documents, etc. And we can provide some of that support through our one-to-one service that we'll talk about towards the end. The other thing you should be looking at is whether you consider approaching a second or maybe even a third lender, just so you have more than one option. It may seem like a lot of work, but actually having more than one option can prove to be an advantage in case things don't turn out the way you expected. It isn't a quick process, but if you have the right information to hand, you have a better chance of success, and equally, you're more likely to have your application processed much quicker. Even if the result is a decline, at least you know fairly quickly where you are in the process. And fundamentally, the banks are trying to help everybody, but they are they are overwhelmed by the sheer amount of applications they are getting at the moment. People raised on the previous call we had that surely they're key workers, but even key workers get impacted by illness as much as anyone else. But at the same stage, they can't process everything, and not everybody is qualified to actually process some of these applications within the banks. Obviously, removing the personal guarantee has made the process appear to be more accessible to SMEs, but at the same stage, that has meant the number of applications has increased dramatically. The maximum loan size that's available, as it currently stands, is less than twice your annual wage bill for 2019, or the last available year that accounts were available, or and less than a quarter of 2019 turnover. So bear those figures in mind. The other important thing is that, unlike most loans where people have historically said when they want a borrowing amount, I need £100,000, and they generally get £100,000, here the cash flows are the determinant of actually what sort of size of lending you're actually going to get. So it's really important that you do a proper cash flow projection to determine exactly what your business needs. Right, so if we move on to HMRC, obviously guidance was published on 20th of March about this. There's 2 key points here. One is the time to pay service. So if you have any outstanding tax, PAYE, corporation tax, VAT, even self-assessment, you should contact HMRC and agree with them a time to pay arrangement. They are fairly agreeable to most things at this moment in time. Okay? Not speaking to them is not a wise move. Likewise, there's been deferment of both VAT and income tax. So your VAT has been deferred for deferred for the next 3 months. So it applies to anybody who was due payments to the VAT, due payments on VAT to HMRC between the 20th of March and the 30th of June. The payments have been deferred to 30th of March 2021. Your self-employed income tax payments, which were due on the 31st of July, have now been deferred to 31st of January 2021. In both these cases, there is no interest being charged on the outstanding amounts at all. And the advice they've given is to cancel any existing direct debits. They will be processing refunds and returns in the normal manner. Obviously, if you do cancel your direct debits in those instances, then they will issue you with a check. But it's just worth noting those 2 things. It also doesn't cover the VAT MOS system, which is the one that covers the European unions, and there are some different rules as regards import anyway, and how you can go about reclaiming that. There is nothing for you to do. You do not need to contact HMRC to tell them that you are deferring the payment, whether it be VAT, your self-assessment, income tax, etc. So it's nice and easy from that standpoint. Next item I've got is commercial insurance. Unfortunately, most policies are unlikely to cover the pandemics or unspecified notifiable diseases. Some much larger businesses have purchased such an add-on, and the government's added COVID-19 to the unspecified notifiable diseases list. But that is as it is, unfortunately. As much as a lot of us thought we had a business interruption policy in place for events like this, it doesn't actually cover this type of event. The other point is that we have protection from eviction for commercial tenants. So businesses will not automatically forfeit their lease if they're unable to pay up to the 30th of June, but they are still liable for the rent. You should be talking to your landlords and trying to negotiate with them. Most commercial landlords are taking a sympathetic approach to this. They will still be looking for payments. You may be able to negotiate a reduced rent during this payment, or even a time to pay arrangement with them, but you need to be sorting these things out and take them up front. Final matter from me is just to mention in passing that IR35, which was due to come into place, the new changes to the system on the 6th of April 2020 have now been deferred 12 months. These rules have significant impacts on off-payroll contractors. So anybody who works through a personal service company or recruitment agencies supplying to large and medium-sized end clients and the public sector, this would have been a significant change coming into effect now. You now have 12 months to prepare for it. So that's quite a significant change as well. So they have pushed off quite a number of things into the distant future as regards to these type of items. So that's everything from me at this point. Unless Kate, we've got any questions at this point?
Yeah, we've had a couple of questions come through. So first question from Tasneem.
Yep.
The question is there any help from micro businesses? I don't take a salary for my business. I don't have premises. I work from home.
The answer is, at this moment in time, there is nothing to help businesses who work from home. The small business grant is not available for any business working from home, unfortunately. And if you are not taking an income from your business, you could look at what Kate will go on and talk about as a self-employment income scheme, and whether you could take something out of that, and that was based on the profits of the business. But I think you're going to struggle, to be perfectly honest.
And then we have another question from Tim Parfit. So Tim says, we qualify for full business rate relief and we have successfully been given our 10K grant. However, we plan to expand later this year, which would mean we no longer qualify for relief. Mm-hmm. There's two questions. Question one, would we have to repay the grant? Or question two, would we still qualify for the business rate payments holiday?
Okay, that's two very good questions. So the first answer to the question is no, you don't need to repay the grant. There's no requirements under it unless you falsify the information you supply. As regards the holiday period, that's a really good question, and I don't know the answer to that one off the top of my head. I would say that you would be still subject to the payment holiday because it's during this council tax year, which runs from April to March next year. So you should still receive the holiday break, even if you were looking to expand your premises. But I will look that up and try and work out what the answer is to that.
Okay. We have another question come in. This is from Mojgang. So we are virtual tenants in St John's Innovation at Cambridge. Mm-hmm. We're a service company providing support for cosmetic industry, and it seems we're not eligible for any grant, and we even have to pay VAT this month.
Okay, so as regards to grant, if you are not paying rates on your current premises, you're not subject to the small business rate relief or the rural rate relief, then yes, you will not get advantage of that grant. As regards to your VAT, if your VAT was due to be paid this month, then you can take advantage of the deferral. So, any questions, Frank?
They were the last of the questions.
Excellent. Okay, right. I will click the button for you, Kate, and we'll move on.
Marvellous. Okay, so the next few slides we're going to just talk through some of the other grants that are available. Sorry, let me just one question come in. I just want to pick that one up. Oh no, sorry, it's not a new question. Okay. Okay, so I just want to cover off the Self-Employment Income Support Scheme. So this was launched on the 26th of March. I know we've not really heard too much about it to date. There has been the latest set of guidance on the 21st of April, and that has confirmed, I think, a number of points. There's certainly where I've seen some YouTube presentations, etc., that may have been quoting the scheme incorrectly. So I would, at the outset, always recommend that you go and look at the guidance on HMRC Gov website, because obviously that's the point of the absolute truth. So the purpose of the scheme is to allow you to claim a taxable grant worth 80% of your trading profits up to a maximum of £2,500 per month for a 3-month period, so 1st of March through to the end of May. Now that may be extended, and don't be too concerned about the fact that the furlough scheme has been extended and we've not heard anything about this. The reason the furlough scheme has been extended is because it was hitting the 45-day cut-off date for notice and consultation for potential redundancy. Obviously, from a self-employment point of view, we don't have that, and so it's likely that anything that's going to be extended will be at the last minute. But fundamentally, if you're self-employed or a member of a partnership, and providing you fit the following criteria, you will qualify for the grant. So you must have submitted your tax return for the tax year 18-19. And if you look at the bottom of the screen, you have actually got until today to do that if you haven't done it already. So you must get that in, otherwise you won't qualify for the scheme at all. You must have traded in tax year 19-20, so the year that's just come to an end. You must be trading, or certainly be trading at the point at which you would be qualifying for the scheme if it weren't for COVID-19. And that doesn't have to be full trading. It could be that you are trading in some part, but it has been reduced as a result of the impact of the current pandemic. You do need to intend to continue to trade in this current tax year, and you must have average profits of less than £50,000 per annum. But I will come back to that point. And equally, it must represent more than 50% of your total income, because it may well be that you have a full-time job or a part-time job and you work on a self-employed basis, or that you've got other income coming from pensions or property, etc. But this has to be more than 50% of your total income. And like I say, you must have lost trading profits due to coronavirus. So I just wanted to give you a couple of examples of points that I think are just worthy of note. So the first thing is going to be trading profits. So let's just be really clear about that. So that's going to be calculated based on your trading income minus allowable expenses. Now you can go on to the Gov website to look at the guidance, which will give you a breakdown of those allowable expenses that will be included. Now HMRC are also going to deduct any trading allowance that you might have claimed, and you probably know that you can claim up to £1,000 per annum. That will be deducted from your trading profits before the calculation is made. Now the grant is going to be calculated on an average over 3 years, or less if you've only been trading for less. So those years are 16-17, 17-18 and 18-19. Like I say, if you've not been trading for all 3 years, it doesn't matter, it will just be an average of what you've got left. Now again, like I say, just be careful for looking out for out-of-date advice. The £50,000 is based on the average over the 3 years, not in any single year. So you could have made a profit of 60,000 in 1 year and 20,000 in another, giving you an average that is below the 50,000. So just bear that in mind. So the government will then look at all income for the same years. So you need to then bear in mind that they'll be looking at any income from earnings, your trading profits, your property income, any dividend income you've got, savings, pensions, etc. And so when it says that your trading profit must equate to more than 50%, it will be more than 50% of a total of all of those different streams of income. So again, you do need to look at that and think about what's being presented on your tax return for those 3 years that we're talking about. So just to give you just a little working example, and sorry I haven't got this on the screen, but just to give you an example. So if, let's say that you've been trading for all of those 3 years, and in the first year you've got a trading profit of £60,000, in year 2, 50,000, and in year 20,000. So if you then average that over the 3 years, that would give you an average trading profit of £43,333. Let's assume then you've got 10,000 a year of pension income coming in. So again, that's 10,000 over the 3-year average period. And you've got property income in year 1 of 8,000, year 2 of 10,000, and year 3 of 12,000, giving you an average income per annum from that property income of 10,000. So that would give you a total average over the 3 years of 63,333. So you can see your trading profit of 43,000 equates to 70% nearly of the total income that you've got. Therefore, it's more than half, and therefore you would qualify for the scheme. Now, the grant's going to be subject to income tax and national insurance, but it doesn't need to be repaid. Now, the thing I'm not sure about at the moment is whether or not the income tax and national insurance will be taken at source when you're allocated the grant, or whether it will be included in your tax return at the end of the year, and therefore the grant income has to show as income on your P&L for the year. And I think there's some detail items there that we're just not quite sure of at the moment. But unlike the job retention scheme, you are allowed to continue working. So this grant will be paid regardless of whether or not you are currently working. You are allowed to take paid work, and you'll still get the grant even if you've taken paid work in the interim, and you are allowed to volunteer. And like every other scheme, you don't need to do anything right now. So you're likely to be contacted mid-May, and the scheme is likely to be paying out at some point in June. Now, I received an email from HMRC yesterday inviting me to a webinar. And so if you're registered for as self-employed, you should now be starting to receive those emails. I would strongly recommend you get online and listen to the webinars, because they do give some very good examples. But the information on the webinar will then be available for you to review on HMRC's YouTube channel. And I wouldn't be looking at any other videos that people have posted around guidance on the scheme other than those directly from HMRC. So we can move on, unless do you want to answer questions, if there's any questions specifically on that one right now? No. Okay, I'll carry on and we'll come to questions at the end. So I'd like to move on to the coronavirus job retention scheme, or now known as CJRS, everybody's referring to. So the scheme was launched on the 20th of March by the Chancellor, and again there are a number of iterations, and again please look online to make sure that you're looking at the latest set of guidance that's been launched. I just wanted to touch on some of the key points. Hopefully you'll probably be aware of most of those now, and then I just want to highlight some bits and pieces that again worthy of note. So the scheme originally said that it was intended to support employees who were potentially going to be made redundant or laid off as a result of the pandemic. That's now changed, and now the scheme is intended to support employers to maintain their workforce where operations have been severely affected, and that does now open it up to a lot more employers and enable them to claim where they may not necessarily have been looking to make their employees, or certainly all of their employees, redundant. It's open to all employers regardless of company type, so that does include sole traders, agencies and charities. And it includes companies where they're managing the PAYE system themselves, or whether PAYE is being managed through an umbrella company. It's valid for all contract types, so whether that be a 0-hour contract, full-time, part-time or fixed term, all contracts are valid. Now, a couple of questions I have regularly are around fixed term contracts, where I might get asked, well, I've got somebody on a fixed term contract and it's due to come to an end while they're on furlough, what do I do? And the answer is you've got a choice at this stage. You can either bring that fixed term contract to an end, and that person fundamentally leaves the company and is no longer able to claim from, or you're no longer able to claim for them. Or you can, if you want to, extend the fixed term contract for the period of furlough and then bring it to an end at the end of that period, so that that individual is still getting some income. But it's entirely up to you as the employer. So the scheme is backdated to the 1st of March, and as we know, has recently been extended now to the 30th of June. So you'll be able to claim for any time in that period. But you must furlough your employees for a minimum of 3 weeks. So again, a popular question is, can I furlough them and bring them back and then re-furlough? And the answer is yes, you can, but it must be for blocks of 3 weeks as a minimum. So you can furlough for 3 weeks, maybe bring them back for a week, re-furlough for another 3 weeks. And I know a number of companies are actually working on a rota scheme where they've got half of their employees are furloughed for 3 weeks while half continue to work, and then they swap the employees over. And that may well be a way of managing things effectively to ensure that everybody is still doing some work. So you'll be able to claim up to 80% of usual monthly wage costs up to a maximum of £2,500, plus the associated employer NI and pension contributions. Now you can top up to 100%, but you don't have to if you don't want to. It's up to the employer whether or not they do that, with a couple of exceptions that I will talk about. Now, when you claim back your 80%, obviously you're claiming back 80% of your employer national insurance and 80% of your pension. You can only claim 80% of pension at the statutory minimum, so at the 3%. So if you uplift, unfortunately, you won't be able to claim anything back on that uplift. A really important point to note now is that your worker or employee should not perform any work at all whilst on furlough leave, and that is both for you or for any linked company. And what we mean by any work is any productive work or the delivery of any services on behalf of the company which may well generate income or profits. So the scheme, there's a couple of groups of people that the scheme is not available for. So if you've got employees working from home and receiving payment for that work, even if that's on reduced hours, unfortunately you won't be able to claim any grant under this scheme. You'd have to have them completely furloughed, doing no work for the company at all. And equally, if you've got somebody on a period of sickness, this is short-term sickness, so this would be somebody who might be on currently at the point at which you wanted to furlough them, might be off because they're displaying symptoms, or have somebody in their household displaying symptoms, so they're currently claiming SSP. You will have to wait for them to return to work, and then you can furlough them once they return. However, if you've got somebody on long-term sick, then you can furlough them. You can also furlough somebody who has been advised to shield because they sit in one of the vulnerable categories, or they're having to stay at home because they've got a caring responsibility. And obviously with schools closed at the moment, that is affecting a number of employees. Now, a couple of things your employees can do whilst they're furloughed. They can complete training, and I would strongly recommend that you do that as much as possible. There is a whole host of free training out there at the moment, including a number of level 2 qualifications that you can get through various colleges and other companies. And it's a really good way of keeping your employees up to date with things, linked back to the company, engaged, but also just making sure that their brain stays active and they're doing things during that period of furlough. They can do other work, so if they want to go off and work for Amazon delivering parcels or stack shelves in Sainsbury's overnight, they're perfectly entitled to do that, providing they're available to you immediately that you bring the period of furlough to an end. And they equally can volunteer. But again, just to be really clear about this, it doesn't mean that they can volunteer for you. So you can't say, well, they're volunteering to come and do some work, because of course that would sit under the category of doing productive work or delivering services on your behalf. I get asked again a lot about, I'm a freelancer, what does that mean? So there are one of two things. If you're a LIM worker, so if you're a dependent contractor paid through an employer's PAYE system, then you can be furloughed. But if you're an independent contractor and you are self-employed, then you will have to claim under the Self-Employment Income Support Scheme. So there are 2 ways that you can do that. And again, I see lots of posts on Facebook of people saying, my boss says I've got to come to work because the business is still trading. I left the company and now I haven't got any income, or I was working my notice and my employer is holding me to that notice period. So employees can request to be furloughed from their employer, but there is no guarantee of acceptance, and it's entirely down to the company, to the employer, to make a decision as to whether or not they furlough you. So unfortunately, you're reliant on the goodwill and nature of your employer. So moving on to
got a question here.
Yep.
From Nigel saying, I've heard that some companies are specifically refusing permission for furloughed staff to work for anyone else. Is this up to the terms of the furlough issued by the employer?
So it would have to be a contractual term. So if your contract of employment says that you're not permitted to work for any other employer, then the company can insist that that takes place. But if the contract of employment doesn't state that, then they are legally entitled to go and work for somebody else while they're furloughed. And many companies will have a contractual clause that says you can work for us, but you can't do any secondary or part-time job, or you can, provided it doesn't interfere with the workings of the company. But it has to be a contractual term for them to refuse that permission. So moving on, so the portal went live on Monday, as we know, for making your claim. Now the portal has been designed to receive 450,000 claims per day. Some people reported on Monday that the system fell over a number of times. It didn't fall over because it was incapable of dealing with the number of claims. Actually, HMRC were holding the system back to ensure that they were managing the number of claims coming through. The stats as at midnight on Monday were 185,000 claims were submitted. 1.3 million employees were affected by that, and the scheme paid out £1.5 billion in wages. Now that will have been for backdated March claims and potentially for some April claims, but you can start to see the size of the number, and we're expecting something like £40 billion in costs. So you can start to see how that's impacting. I would recommend that you look at the HMRC guidelines for what information is required. I don't know if you can see that, but there's this article that you can find. It is incredibly useful for answering your questions around how much. So there's been lots of questions around how to calculate somebody's pay. Do I put in net? Do I put in gross? Do I put in 100%, 80%? One of the things to bear in mind is that the system is calculating on calendar days, not on working days. So to do that, you would calculate somebody's normal monthly wage and you would divide it by the number of calendar days in the month, not the number of days that they're working. You would then times that by the number of days that they've been furloughed, including weekends. So it should work itself through, but you may well find that you're slightly worse off by the calendar day calculation rather than working day. Now you will only be able to make one claim per period. That's in any calendar month. So when you do go on to backdate your claim, if you've got a backdated March claim, you will need to claim for March and April in one go now. Otherwise, what will happen is you'll claim for March, you might go back in next week to claim for April and find that actually you can't make another claim for another month. So you do need to put both of your claims in together. Now you can claim in advance. So providing your RTI, so provided your payroll has been run, you can put your claim in now, even though you've not technically paid the wages out. And I think yesterday was the deadline for you to do that, to enable you to get your payment from HMRC ready to pay your April payroll. So there's a lot of trust going on here that what you say you're going to pay is actually what you are going to pay. Now there is a 30-minute claim process time. Now my understanding of that is if you're dormant for 30 minutes, your claim will be timed out. Now be really careful about that, because you can't save your claim and come back to it later. You have to do it all in one go. And bear in mind, if you've got 100 or more employees, you can upload a CSV file and that's great. But if you've got 99 or less, you're going to have to key in all of that information. So strongly recommend that you have all of the information you need to process your claim in front of you, so that you're not in a position of going off to find out details and then find yourself timed out and having to start all over again. There have been some small system issues. I think the date was the 16th of March on the calculator on Monday. I think that's now been corrected. But of course, there will be lots of questions, so you can expect more clarification to follow. But there are a couple of points on, brilliant, thank you, that I just wanted to highlight to you that you may fall foul of, and so just to be mindful of. So the first is that employers must have created and started a PAYE scheme on or before the 19th of March. Obviously, previously that was the 28th of February. Now, what that means is if you're a small company and you don't have an online PAYE scheme, but you do have a manual scheme, you will have to have registered that. So you do need to go on and register it before you can go on and make your claim. And it takes about 10 days to get an online account. So make sure that you get on and get that done. Employees who are on payroll on or before the 19th of March and which were notified to HMRC on an RTI submission on or before that date will qualify for the scheme. So unfortunately, if you've got somebody who started on the 18th or 19th of March and you didn't put them onto the HMRC system or notify your accountant or put in a real-time information submission on or before that date, they won't qualify. Now, whether that gets changed or amended later just remains to be seen. But again, don't fall foul of that. Employees that were employed as of the 28th of February and have subsequently been made redundant or have left the company, or as I said, working their notice or working unpaid leave, they can be brought back into the company and furloughed, even if you bring them back and furlough them after the 19th of March. They would have to have appeared on the 28th of February payroll submission. So workers on work visas, normally not able to apply for public funds. The CJRS scheme is not classed as a public fund. So categories, all categories of work visas qualify and your workers can be put onto the scheme and be furloughed. So as I said, there was lots of clarification on regular wages and salary. I would strongly recommend that you go and look at the advice and the guidance in terms of what might be classed as a benefit in kind and what can be included in regular wages and what can be claimed. In terms of retaining records, you will need to retain records for a 5-year period for everything that you're doing. A little point to note here, directors can be furloughed provided that the only work they conduct rises from an act of parliament. That's very narrow, and I know a lot, very frustrating for a lot of company directors right now. Now, there has been some toing and froing around the need to have an agreement in writing. So there was an original comment which came out from the Treasury. So the Treasury put the guidance out, the direction, which has legal standing. That came out on the 15th of April. And in there, it did say that employers and employees must have agreed in writing. So the employee must have written back or signed a form to agree in writing. That's subsequently been overridden. And I'm going to read this to you just to make sure that I say it absolutely correctly. So in the latest guidance on the 20th of April, the guidance says to be eligible for the grant, employers must confirm in writing to their employee confirming they have been furloughed. If this is done in a way that is consistent with employment law, that consent is valid for the purposes of claiming CJRS. There needs to be a written record, but the employee does not have to provide a written response. A record of this communication must be kept for 5 years. So technically, the direction from Treasury on the 15th trumps the guidance. However, the guidance was issued after the direction, and that sets out the details of how HMRC intend to interpret the guidance. So I guess what does that mean? What it means now is that if HMRC renege on that and say, no, you can't put a claim in if you haven't got that written acceptance, then they might be in hot water and they might be subjected to a judicial claim. So I think the answer is don't panic, but this does still seem to be an area of confusion. But I think provided that you wrote to your employees at the time to confirm that they were going to be furloughed in the terms of the furlough, you are potentially in a good position. What would probably be wrong to do right now would be to panic and ask people to backdate and sign things until we absolutely understand the situation. And then finally, I just want to clarify the final point, which is annual leave. So lots of questions around annual leave. So the latest guidance is very clear and says that employers asking their employees to take annual leave during a period of furlough must top that annual leave up to 100% of wage where it forms part of the statutory entitlement. So this is the 5.6 weeks per annum. So this is bank holidays and the 20 days minimum standard holiday through the Working Time Directive must all be paid at 100%. And obviously you can still claim 80% of that back through the furlough scheme. Anything on top of that, so say you give your employees an extra 5 days holiday and you ask them to take that extra 5 days, well, that's up to you. You can pay that at 80% or 100%, and that's entirely your choice.
Okay,
So
no,
that's
a good question.
On, yes.
Sorry, just on that point, is that pro rata based on what point they are in the calendar year, or is that in total, the 5.6 weeks?
So that 5.6 is in total. So what you will need to do, and it's up to you as the employer, you could pro-rata it and say, this is where we are at this point in the year, and actually I'm going to ask you to take all of the holiday that you've currently accrued, and they will continue to accrue holiday whilst they're furloughed because all of their terms and conditions will continue. So it's up to the employer. There's been lots of speculation about whether or not you can force somebody to take their annual leave. My response will be that the legal response is where you're contractually allowed to do that. But I would say, providing you're given twice the notice of the holiday you're asking them to take, I think a lot of companies will be wanting to use up annual holiday where they can, because they don't want people coming back and then going off on 4 weeks holiday.
No, exactly. Okay, thank you.
I just wanted to very briefly cover employees who are sick or self-isolating. So if you have an employee who develops symptoms while they're at work, you do need to send that employee home immediately. It isn't necessary for you to close the workplace, but you do need to call NHS 111 for advice. And you will need to assess the risks to others. So anybody that's been in contact with that individual, you will need to think about that, think about whether or not they should now be self-isolating, and maybe indeed you might want to furlough them to enable them to do that. So if you've got an employee who is sick or advised to self-isolate, well, they'll be eligible for SSP from day one. They can top up with universal credit or contributory employee support allowance if they need to top up their salary. Employers need to use their discretion here, I think, on this, and because no evidence is required. So there is an isolation note available. If you go onto the NHS 111 website, you can print off your own isolation note, which you can give to your employer, or you can ask your employees for. And I would be saying, you know, you do need to be asking for some, not necessarily some evidence, but you do need to ask questions about whether or not they've contacted NHS 111, because I'm sure we've all at some point had a symptom and thought, oh my gosh, is this it? Have I got it? Haven't I got it? And it can be very, very confusing. But in any case, if the individual lives alone, they will need to self-isolate for 7 days. If they live, and anybody that they live with, so if they've got somebody in their household that's got symptoms, they will need to self-isolate for 14 days. If you've got an employee that needs to care for a child or a sick dependent, well, there's 2 ways they can do that. They can take time off through your time off for dependents policy. There's no statutory right to pay, and you would normally only expect that they would take 2 or 3 days off if that were normally the case. You could furlough them, and of course, you know, probably if you're a good employer, then furloughing, especially if you're getting, you know, 80% of that is being paid by the government, probably would be helpful to not put any additional pressure on your employee, but it is entirely up to you whether you do that or not. So moving on to businesses who pay SSP. So there is a statutory sick pay rebate scheme in place, which will repay employers at the current rate of SSP, so £95.85 per week, for anybody that goes on to SSP on or after the 13th of March. Anything before that, even if it was for coronavirus, I'm afraid, the first 4 days aren't, and you won't be able to claim the SSP element back. But you will be able to claim up to 2 weeks from the first day of sickness. But bear in mind, though, the individual must be off for a minimum of 4 days for that to apply. Now, especially where you've got somebody that's a shift worker who maybe works for 8 days and then takes 4 days off, it could be that their 7 days of isolation actually means that they've taken 4 days when they've not been on shift and then 3 days when they have been, but they will need to be 4 days officially on SSP before that grant rebate scheme kicks in. So they can be used by employers if they're claiming for an employee who's eligible, they've had a PAYE payroll system in place before the 28th of February and had fewer than 250 employees at the 28th of February. This scheme isn't for large employers, but it does again cover all contract types. Now, you must keep records for 3 years and beyond any claim that you've made. The points of record that you do need to keep is the dates that the employee was sick, which were the qualifying days, so those all important qualifying days, the reason that they were sick, so was it because they were demonstrating symptoms themselves, or were they having to self-isolate because somebody in their household had those symptoms, and the employee's NI number, so you do need to keep those records. And like I say, this scheme applies to charities and connected companies as well. So like everything, no need to do anything yet. There will be an online service available soon, but of course, HMRC are very busy with the job retention scheme at the moment, so I'm sure that this will come a little later. And that's it from me. Richard, is there any questions?
Okay. If there aren't any questions, I will just put up that we are running a number of seminars. As I mentioned, we're doing a much more detailed one on layoffs and versus furloughing, how it can be backdated, etc., which is next Tuesday. We've got accessing finance, the civil scheme in a lot more detail next Thursday. The following Tuesday, we're running one on business development and marketing. The Thursday after that, we're running one on diversification on online sales and adapting business models. And if you go to that link, the cpcabusinesssupport.co.uk/webinars, you'll get a full list of the webinars that we are running. You can also get in touch for a free one-to-one session with any of our advisors. This is available via the cpcabusinesssupport.co.uk website/business-support, business-support. Or you can email support@cpcabusinesssupport.co.uk. And if that is it, then we have pretty much finished bang on time, which is a first ever. Hopefully that has answered any immediate questions. I'll just say one point on the CBILS scheme, just a note. I've put a few of my clients through the CBILS scheme, and it is all about having the right information to hand. We had a case where one company got approval within 21 days. That's not working days, that's 15 working days from their application going in with all the supporting information. And I've had another instance of a client with another lender who actually had it turned around within 9 working days. So it is possible to get these things done in a timely fashion. The thing that slows most people down is actually the lack of information. So if there are no further questions, I'd like to thank you all for attending. You'll get a copy of this presentation in due course. And as I said, we're running a webinar next Tuesday, all around furloughing, job retention scheme, etc. And Kate will be leading that one and I will be comparing. So thanks very much for your time and good luck. Stay safe. Cheers. Bye.